Happy Tuesday, Miami. This is Peter Zalewski. I'm a condo consultant. I'm an expert witness, and I'm the founder of the Miami Condo Investing Club. You're tuning in for the premiere episode of a brand new podcast we're launching. It's called Miami Condo Exchange. The idea is we look at condos as commodities. In our opinion, they're no different than pork bellies. They're no different than oil. They're no different than salty snacks. And if you're going to take a look at the South Florida condo market, you need to look at them as commodities. They trade as commodities. Pricing is based on commodities. Some people tend to upgrade their condos and they think it's going to make it something special. But ultimately, once the unit comes online and it gets into the resale market, it's going to trade like a commodity. It's going to trade based on a price per square foot basis. Don't fall for the marketing hype where something trades per unit. No. You need to look at it price per square foot. It's all the same type of rebar. It's all the same type of cement. Pretty much typically the same type of architect. Maybe they'll bring a star architect involved with it, which is somebody who's got some kind of name brand. They're famous, and therefore a developer's going to try to peddle it for a higher price. Maybe it is a condo that has some sort of brand name associated with it, whether it's an automobile manufacturer, whether it is a restaurant. That's something we're hearing about lately now. Restaurants are naming condo buildings after restaurants. But at the end of the day, despite all of the marketing efforts, these condos are really nothing more than commodities. And that's what we're going to be looking at every Tuesday. We're going to be focusing on the data side of condos. We're going to look at them straight up as numbers, give you some ability to analyze them. One of the regular features we're going to have of the Miami Condo Exchange podcast, at least initially, and probably throughout, is going to be our Miami Condo Cliff Index. It's an index in which we track what's going on a real-time basis. Basically, every Tuesday, we let you know what is going on with our index. It's a great way to monitor, and it foreshadows what you're probably going to see in the closed sales data, which will come out 30, 60, 90, maybe even 120 days later when the quarterly numbers are put out. But the problem with getting closed sales data is ultimately it's too late. Things could have changed. You could have announcements like Liberation Day when President Donald Trump came out, made a policy pivot on behalf of the U.S. Government, and decided suddenly he was going to go ahead and he was going to put in place tariffs. Took tariffs from what were an average of 4%. He took them up to north of 17%. We all know what happened to the stock market then. We all know what happened to the bond market. We looked and saw what happened to the currencies. So things changed relatively dramatically, and we feel as if you're going to play the condo game, especially in South Florida, you need to look at it as a commodity. Another thing you need to do is you need to be able to understand the difference in terms of where the location is. The way we see it, and the way a lot of people at least heard us say it, is that when you're east of Interstate 95 in this area of Miami-Dade, Broward, and Palm Beach County to the north, when you're east of 95 and you're effectively coastal, you are in effectively a trading pit. I'm not talking about the Robin Hood days today in the Charles Schwab where you get online and you pick a stock and you hit it and you press the button and then you sit back and you watch and then they give you some digital confetti. I'm talking about in a day when they used to trade stocks. The way they traded stock is if you had an account, you would call your broker would call the floor of the trading pit. The floor would write out an order. They'd give it to a runner. Runner would take it from the telephone over to the trading pit. We had all these people in this pit and they're yelling and screaming. If their hands were out, they were selling. Their hands were in, they were buying, and there was all kinds of excitement. They traded stocks for the most part. They did them over in New York, and they did commodities over in the Chicago area. I was fortunate enough when I was growing up, I knew some people who were in the commodities game. And when I was in high school, I had jobs where, I was around not condo traders, commodity traders. So in my mind, condos have always been commodities. And the focus of this podcast, which again, every Tuesday, 4 o'clock, it's going to be to try to bring some familiarity to the marketplace for you and to try to help you understand, to wipe out all the hype and really drill down to the basics. And the basics are condos are commodities. They trade price per square foot. They trade based on maintenance fees. They trade on what the view is, and everything can be factored in. One of the issues that comes up if you are selling condos, if you're on the sell side of the market, you're trying to sell a condo, you're going to need to create some sort of value add. You need to add something special to it as to why this condo is different than the other one. We did a study last year. We found that there's about 28,250 condo associations in the state of Florida with about 1.2 million units, of which about 13,000 and 610,000 units, 13,000 associations, 610,000 units are all located down here in the Miami-Dade, Broward, and Palm Beach County, Tri-County region. So condos are really our lifeblood. I like to tell people, besides saying that condos are commodities and this is a big trading pit when you're east of Interstate 95, another thing I say is that condos, South Florida does condos like Silicon Valley does technology. A lot of the stuff that starts with Silicon Valley technologically, it spreads throughout the world. A lot of things that happen down here in South Florida, they tend to spread throughout the country and possibly even farther beyond. Remember, we have condo developers from all over the world. They all come here. They all come to play the game. And because they're coming to play the game, we get all kinds of innovative ideas. After the Great Recession, when the condo market was dead, because remember, prior to the Great Recession, a typical way you bought a pre-construction condo is you put 20% deposit down, and then ultimately, once the tower came online, that's when you would go ahead and have to come up with the last 80%. Well, what happened is a bunch of speculators came in. They put their cash down, and they were buying, and they were flipping the contracts. They were trading the contracts for these commodities, and a lot of people didn't show up to close. Why? Because the price when the unit was delivered was far less than what was originally contracted to. So when you buy pre-construction, it is a futures contract. A condo is a commodity. So this is my framework. This is the way I look at it. Now, I mentioned east of Interstate 95. That's really where all the traders are. This is where, people are getting in the trading pit and their hands are out. They're selling, hands are in, they're buying. If you don't know what I'm talking about, go back and watch an old movie. You'll be able to see it. There was a movie actually that came out way back when, a guy called Eddie Murphy. He was on the program. He was in the movie. It's called Trading Places. And they took somebody basically who was homeless and somebody who was a trader, and they reversed their roles and just to sort of see how it went on. In that movie, you'll get a great example of what it used to be versus kind of what we have today, where you're simply going to get on Robinhood and you're going to buy a stock. If you watch programs like CNBC or you watch Bloomberg or any of the financial news channels, they'll be filming live at the New York Stock Exchange. The thing is, nothing's going on. There's no trading because it's all digital. A lot of it's taking place in New Jersey or wherever it's taking place. But they don't have the trading pits anymore. But still, in my mind, condos are commodities, and we're going to use this Tuesday show to take a look at data. We're going to be talking about data. I am in talks to bring in a condo analyst and expert, somebody who's been around for quite some time. It's the name you probably would recognize if you've been on the ground here for a while, let's say since the Great Recession. And he and I will probably be kicking it around, and I might bring in some of the various guests to talk about maybe the data side, not necessarily touchy-feely stuff, but more of the macro big picture. So that is the general perspective of the Tuesday 4 p.m. Miami Condo Exchange podcast. We're talking numbers. We're looking at condos as commodities, and we're going to give you overall or overarching idea as to what to expect. Now, I will tell you, we're going to be broadcasting live on social media platform. You can always get it at miamicondo.club. With this podcast, we're now going to go ahead and reach out 5 days a week at 4 o'clock Miami time with a different podcast. On Mondays, I do Miami Condo Mondays. I do that with my partner. She's a broker owner of CVR Realty. Her name is Jenny Huertas. Tuesdays is the Miami Condo Exchange, talking data. Wednesdays, I'm doing the Peter Zalewski Show. This is where I interview somebody from the South Florida community that I think has something very interesting and noteworthy to say, whether it relates to condos, real estate, economics, business, anything and everything about that. And then on the Thursdays, Condo Capitalism. It's a distressed condo podcast. And then I wrap it up on Friday with an overview in a buy, sell, hold with Daniel Hernandez. He's a real estate professional over at Compass Real Estate. So him and I kick around 5 of the biggest stories that have occurred within the last week, and we tell you whether or not we're a buy, whether or not we are a sell, whether or not we were a hold on that particular topic, and we give you some insights as to what to expect. So basically, Monday through Friday, you can watch 4 o'clock live Miami time. I'll be doing a podcast. Now, if you want to watch on demand, because 4 o'clock, the idea of the 4 o'clock was that lo and behold, you could, last hour of the workday, or maybe you were already on your way home, you could tune in live and you could watch it, you could listen to it, you could do whatever you want to do. Now, if you can't make it live and you can't, because it's broadcast live, it's not really a way to rewind. You can't see it on demand. But here's sort of the catch. I set up something called the Miami Condo Investing Club. This is a club that's basically a clearinghouse for anything condo related in Tri-County, South Florida area. A lot of the organizations that exist, they have nothing to do with condos. Many investors avoid condos. Why do they avoid them? A lot of it has to do with condo associations. It has to do with the restrictions, the rules, as well as the assessments and the maintenance fees. But we're trying to bring it all together and make it very clear cut. So whether you're a do-it-yourself or a DIYer, maybe you're a real estate professional who's taking on listings and you really kind of want to know what's going on in the marketplace, and you're sick of hearing all of the industry jargon, all of the hyperbole that they're putting out. They're talking about how the market is great when the statistics show something else. Remember, when you hear industry organizations put out their information, remember what they do. They are on the sell side. This is an eat what you kill type of market. This is a sell side market. That's why everybody's always rosy when they're speaking to you. However, if you go and you have a couple drinks with them, they're probably going to tell you a little bit different story once they can sort of let their guard down. And what I do with this podcast, I give you the contrarian perspective. I was a financial journalist for 13 years. I did that, and I saw what was going on. My last gig was as a banking writer. I wrote a column about banking. I left prior to the Great Recession and the crash. I set up a company on the buy side. We use data. Today, you call it big data. Back then, we were basically just going through as journalists, figuring it all out and trying to identify things. I then set up a company called Condo Vultures. This company was set up in 2006 before we had any of the problems. So we were running and gunning, and then once Lehman Brothers failed in September of 2008, the floodgates opened, and the clients we worked with was everybody from Wall Street to family offices, university endowments, you name it. People were coming to South Florida. They were looking to buy condos in bulk. Bulk is when you buy 10 units or more. And that's kind of where I really got into the, got to experience what I call the Great Miami Condo Cartel. And what I'm doing is I'm shining light on it. I'm bringing attention to it. And what is my reason for doing so? I think transparency is the key. I think if you give people information that is transparent, that's in such a way they can understand it, they're going to make a decision. Now, they might not necessarily pay the price that's being asked, but they will make an adjustment to their price if they know what the circumstances are. Then they will go in and they will buy. I don't do any brokering. Well, I haven't been doing any brokering. I do have a broker license. I can do brokering. As the market starts to shake out, I probably will get involved a little bit in doing some of the larger deals, the bulk deals, if you will, the little bit more complex deals. Anybody coming to me looking for some sort of referral or somebody to point to, I always point to my partner, Jenny Huertas, over at CVR Realty. But what I'm going to be telling you is straight up what's going on. I offer the club a lot of information we collect. We make it available, but we do have a paywall as part of the club. So if you're watching live, you're always going to get all this information. If you're not watching live, you're going to want to see it on demand, if you will. You're going to have to be a member of the club. We'll typically give you the first 20 minutes of a podcast, and then after that, that'll all be behind a paywall. So as you start to see the paywall pop up, that's what it means. Same thing goes with the reports. Reports we write, all the statistics we're putting out, and I do like 5 or 6 a week. I've just surpassed 900 reports that we've published in the 2 years, a little bit over 2 years that we've been up and operational as a Miami Condo Investing Club. So it's a lot of data. We probably study it closer than anybody else, and I've been doing it for 20 years. Newsletter I put out on Sundays called the Miami Condo Market Intelligence Report. Launched that in 2007, just to kind of give you an idea. What are some of my claims to fame? I've been quoted more than 2,000 times. You name it, all around the world, whether it's South China Morning News, or it's the BBC, or it's the Economist, the New York Times. Why do people call us? Because we just give the straight talk. Many reporters, when they reach out, they get a lot of hyperbole. They get a lot of the rosy, rah, 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 kumbaya, hold hands. We take the perspective of traders. We're looking at everything from a trading perspective, hence the name, the Miami Condo Exchange, meaning back in the day when you had a trading pit, that's what it's all about. So that being said, that little explanation and the premiere episode of the Miami Condo Exchange, let me go ahead and get into our Miami Condo Cliff Index for this week. Remember, we run it every Tuesday. What we're doing is we're taking active listings, we're taking pending sales, we're running them together, we're multiplying them, and we're spitting out a number. This is the way to look at markets on an apples-to-apples basis. We look at the overall market, and we also look at the vintage market. Vintage is 30 years or more. Why is 30 years or more important? Because of the Surfside condo collapse. Remember back in June of 2021 when that tower came down and nearly 100 people died, and ultimately there was $1 billion paid out to the families of the victims? Well, that changed everything. Legislation changed. Insurance companies, I would argue, lobbied the legislature of Florida, and the Florida legislature passed a series of laws. And as a result, you've seen maintenance fees gone up. You've seen special assessments put in place. You've seen insurance become extremely pricey. And now you have requirements related to inspections. Now, every 10 years, you have to have an inspection done. It's called the Structural Integrity Reserve Study, an SIRS or SIRS. And then at year 30, based on when the building got its certificate of occupancy. That's basically when government officials signed off and said, okay, you can have people move in. It's called a CO, certificate of occupancy. So based on that date, you have to do at year 30, you have to do something, well, leading up to year 30, you have to do something called a milestone inspection or a milestone study. This is an in-depth study that leads to like a real analysis into what's going on. Now, this is statewide. Prior to that, prior to Surfside, primarily down in Miami-Dade County and Broward County, was the only place, for the most part, in the state of Florida where they had to do an inspection at year 40. Why did they do it at year 40? Well, back in the 70s, the federal government was leasing some space down here in Miami, and apparently a tower collapsed, and injuries, damage, all kinds of stuff. I don't know if any people died. I'm not sure about that, but basically a tower collapsed. So the county decided, Miami-Dade County, at the time it was called Dade County, they decided that they were going to go ahead and put in place a special requirement to check out buildings, make sure they were safe. Guess what year or how old these buildings had to be in order to be inspected? They had to be 40 years. So in Miami-Dade County and in Broward, you would hear about something called a 40-year recertification. That was a result of the building that collapsed in the 70s. So Miami-Dade County and Broward, they did it. I think a place in a county or two in Tampa were doing something similar. Then Surfside happens. Now, statewide, year 30, they have to do their milestone inspection. The county's still requiring a 40-year recertification, but at some point it'll all kind of get blended in together. Another thing to keep in mind, I did a podcast about a year ago or so with a chief building engineer, and this gentleman told me that, hey, over in Asia, they have shelf life to buildings. So I started taking a look at it, and I come to find that, a shelf life in a building in a place like Hong Kong, it's 60 years. So by year 60, they're knocking that damn thing down and they're going vertical again with something brand new. I'm not saying we're getting to that point, but just to kind of put it into perspective, something to keep in mind. And, oh, by the way, now we have these milestone inspections at year 30. So just sort of give it some thought. I'm not saying, condos will become depreciating assets, but this is something to at least be aware of as you start to look at the marketplace. So on January the 1st, we launched what is called a Miami Condo Cliff Index. It's tied to what we call the 2025 Florida Condo Association Financial Cliff. And what is that? That's basically the situation we're going through right now. That's where sellers are trying to get out. Why are they trying to get out? Because the maintenance fees are going up, the special assessments are killing them, and they're also getting hit with insurance costs. So they're saying, you know what, I can't afford it, or maybe I don't want to live through the improvements, the fixes, the corrections that are necessary. So they're looking to sell. And what's happening is increasingly we're seeing the amount of supply go up. At the same time, we're seeing the sales stall, and we're starting to see prices pull back and fall. And this altogether is what I would call the cliff. You have a lot of owners who are sitting on the edge of a mountain or end of a cliff, and they're doing everything they can to hold on before ultimately it gives way. Now, if you look back to some of our previous recessions or some of our previous cycles, at least in South Florida, and I've been here since 1993, there's typically a trigger that will cause it. And whatever that trigger is going to be, a lot of times if it's unexpected, and what that unexpected trigger could be something called a black swan. Perfect example of black swan was Lehman Brothers failing back in 2008. Another black swan was the pandemic. Remember, originally when the pandemic hit, the entire market slowed down. It basically came to a standstill. Prices were falling. And then the state of Florida announced that you don't have to wear a mask, masks were mandatory. You don't have to wear a mask, and you could go to Miami Beach and you could twerk on a police car. I'm being a little sarcastic there, but that's ultimately how it played out. And because it played out that way, we saw all these people move in here. They bolstered pricing. Pricing took off dramatically, and now we're starting to see it pull back. Much like if you imagine some of these pythons that are out in the Everglades, they were introduced because people have them as pets. They let them go. Now they're all over the Everglades. They've reproduced. They've done a variety of different things. And, if you ever sort of think about how a snake sort of digests something, well, there's like a big hump and it kind of makes its way through. Well, that's what we were doing with the pandemic with condo pricing. And now we're coming in on the other side of it. So that big surge that we had in buyers, it's all starting to disappear. And as it disappears, it's putting downward pressure on pricing. And it's also creating a lot of questions for people. Where are we going? What are we doing? That's why you're seeing the sell side real estate industry start to come out with very positive news about how everything is fine. They're actually changing parameters. There's something down here like a rule of thumb saying 6 months of supply means equilibrium. Less than 6 months is a seller's market because they have an advantage not to choose from. More than 6 months is the buyer's market. Now you're seeing the industry start to say, well, it's not necessarily 6 months anymore. Nah, it's 6 to 9 months. So they were increasing it by effectively 50% or so. Why? Because the market is in such a situation. So there's a lot of pressure on the market. This is an industry and this is a community that relies on real estate. Real estate will be one of the three legs of our economic stool, if you will. And we got some other issues. Other issues we have that we're dealing with right now is the immigration policy. We have a very aggressive immigration policy in the United States. I'm not talking politics, but what I am talking about is in South Florida, 6.1 million people, 42% are foreign born. You go to a place like Miami-Dade County, you're talking 55% foreign born of 3 million people. So what happens is somebody comes here, they like it, they invite their friends, their family, they come, they like it, they buy, and so on and so on and so on. So if you suddenly create a chilling effect because of aggressive immigration and an alligator Alcatraz, which is basically a pop-up detention center located in the middle of the Everglades, that might turn away some buyers. And if it turns away some buyers, who steps in to replace it? So all kinds of crosswinds right now, all cross currents, all kinds of headwinds. No one knows what's going to go on. So this is where data becomes important. And that's why we're going to be doing these podcasts every Tuesday at 4 o'clock Miami time. And it also takes me to my index, Miami Condo Cliff Index, which again, tied to the 2025 Florida Condo Association Financial Cliff Index. So we're going to update it. We're looking at 23 markets. We look at it for the overall market, and then we look at it for the vintage market. Remember, those are the ones 30 years or more that have to do a special inspection now. So I want to get into some of the index. And well, by the way, one of the reasons I'm doing this podcast and we'll be doing these podcasts is some of the members of the club had said, listen, Peter, you produce a lot of reports. It's a lot to read, a lot to comprehend, but what would be easier for us if you actually, if you did a podcast or if you whether it be audio or video, then we can listen to it. We can listen to it while we're driving, while we're cooking, while we're walking, while we're, our significant other is jabbering on and we don't necessarily want to hear them. So that's really why I'm doing it. And that's why we're doing it 5 days a week, 4 o'clock Miami time. So I'm going to go ahead. I'm going to pull up a chart. I want to show you just a lot of times when you look at images, it'll make it make more sense to you. So we're going to deal with what's going on right now in South Florida, which is Miami-Dade, Broward, Palm Beach County. We'll look at overall and we'll look at vintage. Vintage is old and overall is everything, all inclusive. So we'll look at South Florida overall, which is Miami-Dade, Broward, Palm Beach County. Then we'll look at Miami-Dade County. Then we'll look at Broward County. Then we'll look at Palm Beach County. Again, updated every Tuesday. I've just pulled a number, so you're getting, let's call it market moving information, if you will. So let me go ahead and share my screen, and I'm going to pull up this chart, and let's see if I can find it. There we go. Oh, not bad. First shot. I got it. There we go. So you were all looking at effectively the Miami Condo Cliff